What does it take to own the world? And I don't mean figuratively, and I don't mean buying a globally diversified index fund, because index funds are for cowards who care about risk management and retirement. I mean opening a brokerage account and buying exactly one share of every single publicly traded company on earth, from mega caps like Apple and Saudi Aramco, down to a mid-sized regional gravel company in Helsinki. The final receipt for this objectively terrible financial decision comes out to around 2.6 million USD. But finding that number isn't a matter of just googling price of all stocks. To get that number, you have to untangle the deepest, most broken corners of the global financial infrastructure. You'd think that there's a centralized master list of every company on earth. There isn't. The global financial system is less of a unified database and more of a collection of more than 100 different local flea markets. Some, like the well-known NYSE, provide access to a smorgasbord of equities, while others feel like they're still run by a fax machine. But if you just scrape the directories of every exchange in the world, you get a massive list of hundreds of thousands of tickers. Exchanges are littered with ETFs, warrants, derivatives, and more. Who needs an ETF when you can just do it yourself? We don't want those. We only want pure, unadulterated shareholder equity. So, you have to aggressively filter them out. Now, you run into the dual listing problem. Massive companies trade on multiple exchanges all over the planet. If you aren't careful, you'll accidentally buy Anheuser-Busch twice, once in New York and once in Brussels. To fix this, you have to track down the underlying DNA of every asset. This is called the ISIN, the International Securities Identification Number. It consists of a 2-letter country code, a 9-character alphanumeric national security identifier, and a final numerical check digit. What a mouthful. If you want to be pedantic, a company can sometimes have multiple ISINs due to certain regulatory laws, but to save the massive headache, let's ignore that and the other fringe cases. By now, you have stripped 200,000 raw financial instruments down to a clean list of roughly 60,000 unique, globally traded companies. If you ask a human to check the price of every single one, it would take months. But if you build an automated system to check them, it takes minutes. But it breaks because the global market is full of ghosts. Ooh. In a list this large, things are constantly changing. Companies go bankrupt, get acquired, or get their trading halted for fraud. In data analysis, a single missing variable acts like a virus. If you try to add up a column of 59,999 numbers but one blank space, the final total is an error. You have to build a system that hunts down the problematic companies, quarantines them, and evicts them from your list. We have 60,000 prices, but they are in 150 different currencies. You can't just add Japanese yen to Swiss francs and call it a day. We need everything in USD, which means cross-referencing our massive list against the live spot rate for foreign exchange markets. The forex markets never sleep. They are awake 24/7, changing rates every single second. So by the time that you are done calculating, the rates have probably changed, and you have to start all over again. For the sake of our sanity, we will peg the rates, and not follow the live spot rates. But this is where a spanner gets thrown into the works. You'll ruin your entire calculation if you don't know the specific history of the London Stock Exchange. Let's say you pull the data from Out of Options plc, a British retailer. The system says that the price is 552. You multiply 552 by the British pound exchange rate of 1.25 and you conclude that one share of this clothing store costs about 700. Keep doing this and you'll soon conclude that the United Kingdom must be the biggest economy on earth. The London Stock Exchange quotes equity prices in pence, not pounds. If you blindly apply exchange rates, you will inflate the entire United Kingdom's equity market cap by a factor of 100, making it the largest equity market in the world by far. You have to isolate every single stock on the British exchange and divide its price by 100 before applying the conversion. You have to do the exact same thing for the Johannesburg exchange, which trades in South African cents. Because of all the hoops you have to jump through to get the data, glitches can happen in any part of the process. A decimal placement error might accidentally quote a 5-cent over-the-counter penny stock at 5,000. Any stock claiming to be worth more than $10,000 a share gets flagged and interrogated. If it's not a known, legitimate stock, you throw it in the trash. Another roadblock would be Russian stocks. Since 2022, Russian exchanges have been sanctioned, so you would have no way to obtain the stocks listed on them. You didn't actually need to perfectly measure the value of thousands of penny stocks, because a tiny basket of mega shares holds all the weight. Berkshire Hathaway Class A shares alone will set you back over 716,000. Add in a few Swiss chocolatiers like Lindt and some obscure holding companies, and the top 50 stocks alone have an outsized impact on your final bill, at more than 30%. I haven't even begun on odd lot pricing and the commissions paid when buying the stocks, but that's way too much for me. I'll let you do the rest.